This time last year, a bulk of trade barriers between Korea and China were removed. But contrary to expectations, Korea's trade with its #1 partner hasn't fared particularly well over the past 12 months. Our Kim Min-ji zooms in on the FTA's achievements and the challenges that remain.
It's been exactly a year since the free trade deal between Korea and China took effect, but bilateral trade has been on a continual downward spiral. Korea's exports to China came to $112.4 billion during the first 11 months of the year, down over 10% from a year ago. Imports slid roughly 5% on year to $79 billion. But in a sign that the trade pact has helped alleviate the decline, when it came to export items exempt of tariffs, the fall was only at 4%.
The benefits were most apparent in the chemical and petrochemical sectors, where the tariff cuts were relatively larger. Until now, the scope of tax exemptions has been limited, as it's only been a year, but we expect the benefits to increase as the years progress.
Under the deal, Seoul agreed to eliminate import tariffs on 79% of products from China within a decade, while Beijing would do the same on 71% of products from Korea. In 20 years, duties will be removed on over 90% of all goods. With the deal taking effect on December 20th, 2015, the countries got an extra round of tariff cuts ahead of the new year in 2016. Korea and China will now get to enjoy a third round of cuts starting on January 1st. However, it's still a bumpy road ahead. China has been stepping up domestic production and seeking to slap more non-tariff barriers on Korean imports, adding to concerns of a resurgence of trade protectionism. On top of that, Seoul's decision to bring the U.S. THAAD missile defense system to the peninsula, which China opposes, is another factor that could potentially weigh on bilateral economic ties. Korea's free trade deal with Vietnam, which took effect on the same day, however, is expected to provide some relief. Seoul's exports to the Southeast Asian country came to $26.4 billion as of October, up 13% from the year before. Imports surged 28% on year to $10.4 billion.
In China, Chinese firms usually buy Korean exports, while in Vietnam, Korea invests there and the products produced there are sold there. So because of this structure, if investments rise, exports go up too. Korean companies are also shifting their production bases to Vietnam, so we expect the strong export growth to continue.
Going forward, export-reliant Korea may need more than just free trade deals. Experts say the country needs to step away from its key industries and seek to foster new growth engines that create products of added value. Kim Min-ji, Arirang News.